As promised, here is a very big story problem which details a little bit more about the differentiation between the accounting and economic profit. Very typical exam question that you might see right here, and basically it just tells you to take a look at all of the information that is being provided to you and make sure that you understand the differences and similarities between the explicit and implicit costs as well as accounting and economic profit. So let's go ahead and read through this. Suppose that you graduate college and you pursue your dream job, whatever that may be. I'm assuming here it's going to be a lawyer. After 1 year in business, you sell 100 units for $120 each. So suppose that you try 100 cases for $120 for each case. You paid $50,000 for your workers and wages, $20,000 in lease payments, $15,000 to purchase goods, even though a lawyer probably doesn't need to purchase a lot of goods in this instance. Maybe all the drugs or cocaine that you need just to forget that you are a lawyer, or because you work long hours. We'll go ahead and make that. We'll assume that. $5,000 in utilities, $5,000 in insurance, and then another $5,000 in office supplies. You could have earned $40,000 working somewhere else, so your next best alternative, your second best job is going to be an accountant, and an additional $10,000 by putting your savings into stocks rather than in your own firm as a lawyer, so rather than your own sort of rather than your own business in this instance. Question that we're going to ask right here is find your accounting and economic profit. So where would you want to go ahead and start us off? First, you probably want to go ahead and find out what your total revenue is going to be. So remember, total revenue minus all of your costs is going to give you your profit. So total revenue. And total revenue is simply going to be price times quantity, as we've always imagined. So as we've always sort of said before. Here, your price is $120 each. Your quantity is 100 units. So therefore, your total revenue is going to be price 120 times quantity, which equals 100. Multiply those out together, and you have a total revenue of $120,000. So first step is to always find out how much revenue is coming in for you. Second step is to go ahead and find your explicit costs. So remember, there are two different types of profits. Accounting profit takes your total revenue and subtracts out all of your explicit costs. So here, we'll build up another column right here, explicit costs. So just by taking a look at all of the information that's being provided to you, what are your explicit costs? Remember, explicit costs, these are costs that you pay directly to another individual or another economic entity. $50,000 in wages, would that be explicit? Yes, it would be, because you're paying it directly to your workers. $20,000 in lease payments, so mortgage payments, you pay that to whoever owns the building. $15,000 to purchase your drugs right here, or purchase your goods. So yes, that's going to be essentially something that you give to your other supplier. $5,000 in utilities, you pay utilities company, insurance company, and then your office company as well. So all of these in yellow right here are going to be your explicit costs. How about this $40,000 and this $10,000 right here? Well, remember, this isn't going to be paid directly to another entity. These are going to be considered your implicit costs, and that's going to come when we talk about the economic profit. So here with the accounting profit, we just want to go ahead and write all this down first. So here we need to subtract out all these additional variables here with the explicit cost. We have your wages. That's going to be subtracting 50,000 right here, so negative 50,000. We have lease payments. That's going to be another 20,000 down the drain. We have the cost of goods sold, so COGS. That's just going to be shorthand for cost of goods sold. That's essentially your raw materials, so minus 15,000 right here. You have the utilities, which is 5,000 minus 5,000. And then you have insurance and office supplies, which are 5,000 as well. So insurance minus 5,000. And then office supplies, which is another $5,000 right here. So when you take your total revenue, subtract out all of your explicit costs. So 120 minus 50 minus 20 minus 15 minus 5 minus 5 minus 5, you will get your accounting profit. So here, accounting profit. And accounting profit, remember, is just total revenue minus explicit costs. And when you do this calculation right here, you should get a positive $20,000. So positive 20K. And in this instance, you would be pretty happy. Your income statement is showing a positive amount. You would definitely be paying taxes on that amount, but it is a positive amount. So yes, your business is very profitable. You've earned a positive 20K amount. However, remember, we are in economics and we care a little bit more about the economic profit. And the economic profit needs to take this one step further by subtracting out all of our implicit costs. So anything that deals with the sort of opportunity cost, or essentially what you have foregone in order to pursue your dream job of being a lawyer. And this is exactly where the last statement, the sort of last numbers come in. You could have earned $40,000 working somewhere else. Your second best alternative was a accountant, so that's $40,000. That's going to be seen as an implicit cost as well. And then $10,000 by putting your savings into stocks rather than into your lawyer business, into your practice. So here, another $10,000 worth of implicit costs. So foregone wages, foregone earnings, these are all implicit costs, and we need to subtract this out in order to find your your economic profit. So here, take a look at your implicit costs. So implicit costs. And the implicit cost, we can go ahead and add those two new variables, your foregone salary, which is the minus 40K, which you could have worked by being an accountant, and then your foregone earnings or interest earnings of minus 10K. And then once you go ahead, take your accounting profit and subtract out the additional implicit cost, you're going to go ahead and get your economic profit. So here, 20,000, positive 20,000 minus 40,000 minus 10,000 will give us an economic profit of minus $30,000. So minus 30K in this instance. So therefore, our economic profit is negative. And what does that tell us? Did we make the good decision by pursuing our dreams, or the bad decision? It just tells us that we have made the bad decision. Remember, if economic profit is negative, that means we should not continue on our current path. Should not continue on current path. Meaning that we've made the wrong decision. We should have gone with our next best alternative of being the accountant instead. So remember, negative economic profit is not something that we would like to see. It just tells us that we've chosen the wrong path. If it's positive, we have chosen the right path. And if it's exactly equal to zero, we're earning normal profits. We have essentially a normal rate of return. So once again, anytime we are talking about profit, just in the general case in this class, we are referring to the economic profit, which is going to be total revenue minus your implicit cost minus your explicit cost. There are big differences between accounting and economic profit, as we see right here. We do want to take into account these opportunity costs as well. So what this big story problem is telling us is that there are differences between implicit and explicit costs, as well as accounting and economic profit, and that is going to be your job to sort of dig into and make sure that you understand the similarities and differences between all of these concepts. So here, basically, you have a very big story problem. You'll see a problem like this. You'll see a few problems like this on your exam. So go ahead and get more practice with it. We'll go ahead and take a look at the differentiation between the short run and the long run and get into the beginnings of production in our next lecture.